Hey everybody, welcome back to the channel. This is Top Crypto Bull here once again to update you guys on the greatest and latest news and rumors of the crypto world. Let's get right into it, guys. Well, guys, found this little article which is about DeFi. Just in case you thought DeFi was dead, I want to read this little article to you guys. And it reads like this: Lower interest rates could be the key to DeFi summer. Declining interest rates, along with the rising investment in Bitcoin, could provide the fuel the DeFi markets to experience a long-awaited resurgence. It's been a wild ride in the markets in recent days. The United States Federal Reserve is forecast to cut rates in 2024, but even inflation prints and somewhat contradictory jobs markets have created a lack of consensus on the total number of rate cuts for the remainder of the year. As we contemplate where the market goes from here, speculation remains around the question of what the Federal Reserve has in store. So what are some potential outcomes from the rate cuts? Let's explore the impact of a few areas of the crypto industry. As rates come down, the resulting weakening of the U.S. Treasury yields are likely to strain the spotlight of riskier but higher yielding opportunities elsewhere, and that means investors will likely have a greater appetite for cryptocurrencies. This uncertainty puts the focus on Bitcoin, which is typically seen as a risk-on asset. When interest rates drop, investors pile into riskier asset classes. That may not always be the case, as ARK Invest CEO Cathie Wood pointed out during our fireside chat at the Hong Kong Web3 Festival earlier this year. She expressed her believes that Bitcoin could actually function as a risk-off asset, citing its success amid currency devaluation in emerging markets around the world. So is DeFi returning? The long summer of decentralized finance, DeFi in 2021, was a pivotal moment for Web3, the second major bull market following the 2017 ICO boom. During this phase, lots of critical DeFi infrastructures came on chain, particularly on the Ethereum platform. All told, its total value locked TVL increased from around 2,100% from roughly $700 million to $15 billion. But today's DeFi landscape is increasingly focused on another ecosystem, and that is Bitcoin. Against a backdrop of reduced interest rate, investors may be drawn to higher yields on the network and its growing number of layer 2s. So much so that I believe Bitcoin will power the next DeFi summer. There's excitement around the evolving BTC5 or Bitcoin DeFi movement that is different from the buzz around the assets as an inflation hedge, as well as the bullish ETF approvals earlier this year. Bitcoin's DeFi ecosystem is also booming, triggered by last year's launch of ordinals, followed by runes, and a wave of yield-bearing protocols on EVM-compatible scaling solutions. And Bitcoin is also gaining utility and interoperability with funds flowing into projects like Babylon and others. This reflects a broader trend across the DeFi landscape, a culture defined less by pure speculation and more by community, utility, and innovation. While speculators and degens can still pump their bags, the space as a whole is becoming more relevant to the mass market. Naturally, the viability of supercharged DeFi sector will depend on the stability and the protocols themselves. A note of caution is that hacks and exploits could happen. A note of caution is that hacks or exploits could dampen investors' confidence and limit the expected impact of interest rate cuts on the wider space. This is likely more true now than in previous cycles, since today's investors have grown both more sophisticated and more skeptical. What about meme coins? Meme coins are on the rise. Still, falling interest rates tend to spur investor activity, increasing their appetite for assets with higher risk but greater potential returns. Case in point, meme coins, which have recently rocketed even in the absence of rate cuts. For instance, political finance or polyfi meme coins have surged as the US election draws closer, with tokens playing on the names of political figures and movements such as Biden or MAGA, pushing polyfi combined market capitalizations above 400 million as of August 16. Elsewhere, a Bitcoin-based dog meme coin, DOG, D-O-G, became the largest asset launch on the Runes protocol, peaking at a market cap of nearly $1 billion. It's entirely possible that meme coins will go parabolic, especially if interest rates trigger a bull market driven by retail FOMO. The meme coin market is worth more than $30 billion as of August 16. Of course, the inherent volatility of meme coins and their potential for sudden and often spectacular crashes will inevitably keep some investors on the sidelines, particularly if interest rate cuts are less substantial than expected, or if regulatory scrutiny starts to mount. TradeFi brings deeper liquidity. The entrance of spot crypto ETFs in the United States, not to mention their performance, has also piqued the interest of traditional finance, evidenced by billions flowing into the Bitcoin ETFs. With many institutions already warming to the asset class, the net result should be deeper liquidity and greater regulatory support. It's easy to imagine Ethereum reaching a new all-time price high thanks to institutional inflows. Increased institutional participation in crypto goes beyond the pursuit of yield, though. TradeFi players could show greater interest in stablecoins as a medium for payments and international trade, further reforming the industry's image as a speculator's paradise. On the other hand, the lack of a comprehensive modern framework for digital assets in the United States, as well as the perceived risks associated with DeFi, may continue to hinder widespread adoption, regardless of interest rates. Naturally, these are just a few areas to watch. The actual impact of any rate cuts will depend on many factors, including regulations, geopolitical tensions, and investor sentiment. There you have it, guys. What do you guys think of the article? Let me know in the comments. Are we going to see another DeFi summer? And especially the Bitcoin DeFi sector going to moon here pretty soon if we get rate cuts, guys? That is the question. But it wouldn't be a bad idea to invest right now in the low prices into some Bitcoin DeFi projects, guys. But I also wouldn't leave out the Ethereum DeFi projects out, guys, because both the Bitcoin ETF and the Ethereum ETF have been launched, guys. So I do see both their DeFi projects mooning here pretty soon, guys. Well, guys, let me know in the comments what you guys think about the article and on DeFi. And also, just a reminder, guys, please like the video, subscribe to the channel, help us grow. This is Top Crypto Bull signing off, and I'll see you in the next one.